The Fed has completed its latest rounds of stress tests on this country's bank. Fed sees, quote, significant improvement in bank capital, but it is also recommending limits on dividends. Bloomberg's chief Washington correspondent Peter Cook is standing by with more. And Peter, that dividend portion, really the focus.
It is indeed the focus. The stress test of those 19 largest bank holding companies officially over at the Fed. And we know that some of those banks have been given the green light to increase or restart dividends, buy back shares, or repay government capital. But, Margaret, the Fed is not telling us which banks specifically. They are leaving that up to the banks themselves to make that public. What the Fed is releasing at this hour is an explanation of the tests themselves and the criteria used in their assessments. The Fed says in general, again, there's been a significant improvement in bank capital. Banks are generally healthier overall. Both the quality and the quantity of capital, many large bank holding companies have improved since the financial crisis, the Fed says. The evidence, according to the central bank, includes the 19 bank holding companies have increased their common equity by $300 billion between the fourth quarter of 2008 through the end of 2010. Their Tier 1 common capital ratio has risen to 9.4% in the fourth quarter of 2010 from 5.4% in the fourth quarter of 2008. But the stress test challenged the banks to justify their capital plans over the next 2 years under the scenario of another recession. Specifically, the factors included a 1.5% decline in GDP from the fourth quarter of 2010 to the end of 2011, an unemployment rate of 11%, as well as further declines in home prices and stocks. And they were asked for information on their securities, loans, other holdings, and they were also tested under capital rules that are anticipated by the Dodd-Frank legislation and the still-to-be finalized Basel International capital rules. And banks that requested capital moves will be told today if they've been approved, if they have the green light. The rest are going to be notified by March 21st, according to the Fed. And each bank's going to get a full explanation of their stress test results in April. Now, we do have some banks, at least as Bloomberg has looked at this situation, that are projected to increase their dividends. Let me walk you through some of those banks. PNC, 10 cents is the current dividend. Bloomberg projects they could rise to 25 cents. JP Morgan at 5 cents right now, projected to go to 20 cents, and Wells Fargo at 5 cents, projected to go to 15 cents. So some of the changes Bloomberg anticipates here, again, we'll find out later if any of these banks, Margaret, have indeed been given the green light by the Fed to move forward with some of these capital changes, and certainly some of the most scrutinized capital changes in years.